Gold, the glittering metal that has captivated human civilization for millennia. Wars have been fought over it. Empires have risen and fallen because of it. And today, it's often hailed as the ultimate safe haven for investors. But is gold truly the fortress of security it's made out to be? Or is it simply a relic of the past, overhyped and misunderstood in the modern financial landscape? Stay with us as we unravel the fascinating and at times shocking truth about gold as an investment. What we'll uncover may forever change the way you view this precious metal. Let's start with the basics. For centuries, gold has symbolized wealth and stability. Its durability, scarcity, and universal appeal have made it a preferred medium of exchange and a store of value. When financial markets are in turmoil, when currencies falter, and when global tensions rise, people often turn to gold as a safe haven. But here's a lesser-known fact. While gold's allure is timeless, its performance as an investment is far from consistent. Yes, during periods of economic uncertainty, gold prices often spike. But is that enough to justify its reputation as a risk-free asset? Let's dig deeper. Gold's reputation as a hedge against inflation and economic instability is widely accepted. But does it hold up under scrutiny? Consider this. From 1971, when the US abandoned the gold standard, to today, gold has seen an average annual return of around 7 to 8%. Sounds impressive, right? But compare that to the stock market. Over the same period, the S&P 500 has delivered annual returns closer to 10 or 11%. The gap may seem small, but over decades, the difference is staggering. If you had invested $10,000 in gold back in 1980, it would be worth roughly $50,000 today. Not bad. But had you invested that same amount in the stock market, you'd be looking at over $500,000. And here's the kicker. Gold doesn't produce income. Unlike stocks that pay dividends or real estate that generates rental income, gold just sits there. Its value relies entirely on what someone else is willing to pay for it. Is that really the hallmark of a safe haven? Gold's value is heavily influenced by global forces. Central banks, for instance, hold massive reserves of gold. In fact, central banks are among the largest buyers of gold, and their actions can significantly sway its price. But did you know that much of the world's gold reserves were accumulated during times of war and economic upheaval? For example, during World War II, nations hoarded gold to back their currencies. Today, central banks still buy gold, not as a currency standard, but as a hedge against geopolitical risks. Now, here is a surprising twist. Gold's status as a risk-free asset often relies more on perception than fundamentals. For example, during the 2008 financial crisis, gold prices initially fell alongside other assets as investors liquidated positions to get cash. It wasn't until later in the crisis that gold rebounded. The lesson? Even gold isn't immune to panic. Gold's glittering appeal also masks some stark realities. Mining gold is an environmentally destructive and energy-intensive process. For every ounce of gold, countless tons of earth must be moved, and the carbon emissions generated are immense. Countries rich in gold reserves often face political corruption, human rights abuses, and environmental devastation. Moreover, the global gold market is rife with speculation. Did you know that much of the gold traded in financial markets doesn't even exist physically? Gold futures and exchange-traded funds, or ETFs, often represent promises rather than actual bullion. This disconnect between paper gold and physical gold adds layers of complexity and risk. In today's interconnected world, gold's role is evolving. Digital currencies, like Bitcoin, are often referred to as digital gold. With their finite supply and decentralized nature, these assets are challenging gold's dominance as a hedge against inflation and economic instability. But let's not dismiss gold just yet. It remains a critical component of diversified investment portfolios. Financial advisors often recommend allocating 5 to 10% of one's portfolio to gold or other precious metals. Why? Because gold's performance tends to diverge from that of stocks and bonds. When markets crash, gold often provides a cushion, albeit an imperfect one. Beyond its financial attributes, gold has an undeniable psychological power. Its intrinsic beauty, its role in cultural traditions, and its historical significance make it a symbol of security and prosperity. This emotional connection is part of what sustains its value. But investors must ask themselves, are they buying gold for its financial merits, or are they succumbing to its psychological allure? The answer can make all the difference. Gold's appeal is not limited to individual investors or central banks. Entire nations use gold as a geopolitical tool. For instance, during times of sanctions or trade wars, countries with substantial gold reserves often find themselves better positioned to weather economic disruptions. China and Russia have been aggressively increasing their gold reserves in recent years, signaling a strategic shift away from reliance on the US dollar. But this strategy comes with risks. The global gold market is volatile, and prices can swing dramatically in response to macroeconomic events. For countries relying heavily on gold, a sudden price drop can have severe economic consequences. This underscores the complexity of using gold as a financial anchor. As awareness of environmental and ethical issues grows, gold's dark side becomes harder to ignore. In some regions, gold mining has led to deforestation, water pollution, and even the displacement of local communities. Efforts to produce responsible gold are underway, but the transition is slow and fraught with challenges. For conscious investors, these issues raise important questions. Is investing in gold perpetuating these problems? And are there alternatives that align better with their values? The rise of cryptocurrencies has added a new dimension to the debate. Bitcoin, often dubbed digital gold, offers many of the same benefits as physical gold, such as scarcity and independence from central banks. But it also introduces extreme volatility and regulatory uncertainty. Still, the comparison is compelling. Bitcoin and other cryptocurrencies are easier to store, trade, and verify than physical gold. As technology evolves, these digital assets may continue to erode gold's dominance as a hedge against inflation and economic instability. So, where does this leave us? Should you invest in gold? The answer depends on your financial goals, risk tolerance, and time horizon. Here are some key takeaways. First, understand gold's role. Gold is not a magic bullet. It's a tool. Use it to diversify your portfolio, but don't expect it to outperform stocks or real estate in the long run. Second, beware of speculation. If you're investing in gold ETFs or futures, understand the risks. Paper gold is not the same as physical gold, and market volatility can amplify losses. Third, consider alternatives. Explore other assets that can serve as hedges, such as treasury inflation-protected securities or even cryptocurrencies, depending on your risk appetite. Fourth, think long-term. Gold can be a hedge against inflation and geopolitical risks, but its value can stagnate for years. Patience is essential. And finally, stay informed. The global financial landscape is constantly evolving. Keep an eye on emerging trends and adjust your strategy accordingly. The truth about gold is neither black nor white. It is neither the ultimate safe haven nor an investment to dismiss outright. Gold's value lies in its history, its psychology, and its ability to complement other assets in a well-balanced portfolio. As you navigate the ever-changing landscape of global finance, remember this: no investment is truly risk-free. The key is understanding those risks, managing them wisely, and making informed decisions. Gold may not be the answer to every question, but it remains a fascinating part of the equation. So, Is gold overhyped or misunderstood? The answer is up to you. But now, at least, you know the truth. Thanks for watching. And don't forget to like and subscribe for more content that makes you think.